Okay, TikTok, what's happening? Ladies and gentlemen, what's happening? This is Ironworth Trading. This is not financial advice. I repeat, nothing in this video and this live stream tonight will be financial advice. It's all educational and entertainment purposes only. Right? For the record, let the record show. This is not financial advice. This is educational advice and for entertainment purposes only. With that being said, we're going to go ahead and get started. So yesterday, a lot of people was joining the live and they kept asking, I'm new to trading. I don't know how to trade. I don't know what I don't know what's going on. So I figured that I would dedicate tonight's live to anybody and anyone that wants to learn how to read charts, how to get started in trading. And maybe you're not even an investor yet, right? I'm going to show you tonight how to do that as well. So stay tuned, get comfortable. I ain't gonna get started right away. I'm gonna give you a chance to get your shit together. I'm gonna let some people pull up in here before I really get started with the show. That way I won't have to do too much backtracking. But tonight we're gonna go over a few things like candlesticks. What are they? How to read them. We're gonna go over how to see it on the chart. So I want to see if you guys actually comprehend the information, right? And so once you got the idea of how to read a candlestick, from there, I will show you how to enter a trade. All right, so first things first, I'll go ahead and get started. They'll come in. So when you're looking at a chart, whenever you see any chart, any stock that you type in, and this is also for Forex as well and for futures as well. So you can apply this to Forex, futures, and stock options. So again, this live is targeted toward beginner traders that don't have a clue, but you want to get started. You want to learn how to trade. You want to learn how to read a chart. This is the right place to be for right now. If you already seasoned, you don't have to stay. You don't have to, tune in to today's live. I'll probably go live again for sure later on at 12 to give you guys my signals and my call outs. Y'all know how we do. But so first thing I want you guys to pay attention to are, the red and green, because you can change these colors and make them whatever colors you want for the most part. But red and green, the colors mean something. So whenever you see it's green, that means that the price went up. Whenever you see it as red, a red candle, that means that the price went down. Super easy. Y'all with me? All right. So now that we know what the red candle mean and the green candle mean, you're already one step further than you was before you didn't know shit. We're going to keep going. Now, the green candlesticks, how do you read them? When you see a green candlestick pop up on the chart, what does it mean? It's telling y'all a story. These candlesticks, they telling y'all a story. They calling it a candlestick. Okay, look at the shape of it. Y'all notice the top part of it sticking out of it? That's just like a candle. That's called the candle wick. Baller, what up? You might not want to sit in this live. I'm teaching people today. So if you don't want to sit through this, you might want to leave a live. So yeah, that's called a candle wick, you guys. So sometimes, you got a top wick and a bottom wick. And what that wick does is tell you how high the price came and how low the price came within that time frame. So let's look at the first candlestick structure right here in the middle, the green candlestick. Notice that it says this. Look at the open, right? So at the bottom of this green candlestick in the middle, you see the word low, and then you see the word open. So let's say that 9:30, the stock market open, and Apple, let's say this is Apple, and it opens at $150, right? That means the price of Apple that day started out at $150. That's the opening. So then let's say an hour go by and Apple drops down to $145, right? And then 4 hours later, it shoot all the way up to $170. And then let's say 30 minutes later, the stock market closes. So what just happened was the price opened at 150, dropped down to 145, shot up to 170, and closed at 165. So it's showing you the highest that Apple was during that day. It's showing you the lowest that Apple was during that day. It's showing you where Apple opened at, and it's showing you where Apple closed at. You understand? Same with the red candlestick, but in reverse. So the red candlestick opens at the top, unlike the green candlesticks. When you read a red candlestick, you're reading it from the top down. The price went from this spot down. So it opened at 170, fell all the way down to 150, came all the way up to 175, and closed at 155. And that's what a candlestick would look like right there. So it's going to show you the high. It's going to show you the low. It's going to show you where it opened, and it's going to show you where it closed. This information will be valuable to you in the future. But for the most part, you just need to know what the high and the low is, what the open and the close is. When this is super simple. I'm going to keep it simple because people like to complicate things because they gatekeeping and they don't want y'all to make no money. But we're not doing that at Ironworth Trading. I want to build a nation of traders. You know what I'm talking about? Spread the knowledge. We ain't gatekeeping shit. So if you want to learn, stay here. If you don't, you know what I'm saying, you can get the hell on. Ain't no hard feelings. You feel me? No hard feelings. But yeah, I want to show you guys what it looks like actually on a chart real quick so that you can get a good idea of what, now that you know how to read one, you'll get a good idea of what it looks like. We'll use NVIDIA as an example. Now, President Trump and the CEO of NVIDIA was just buddies and shit. So NVIDIA had a good little leg up today, elephant trunk leg. So now, no Diddy either. Now, anyways, so this shit, obviously, y'all know what a red candlestick is. Y'all know what a green candlestick is. Remember, the green candlesticks are to be read from the bottom up because they open at the bottom and then they close at the top. The red candlesticks open at the top and close at the bottom. So this is a 30-minute chart. All right. So I want y'all to understand what this means. So we are looking at one whole day and each candlestick represents 30 minutes of time. That first red candlestick, not the little bitty one on the far left. You know, I'm talking about the one that enters after the light gray area right there on the left. So it opened up red, which means it opened up at about $174.70, something like that. It fell down to that blue line. Now, I want to tell y'all something about that blue line and that red line. The blue line represents the level of support. What is the level of support? That's where the price came down to. And it seems like right there at that spot, price just didn't want to go no lower than that. It acts as a floor. It is where it's where buyers stepped in at and stopped the price from going lower than 173. Excuse me. The red line at the top represents the level of resistance. So sellers stepped in at that level and stopped the price from going above 176. You want to mark your levels of support and resistance. You want to do that so that you can have a clear idea of where price has came from and where it is going. That's right, Nutty. No, I'm definitely gonna cheat you. I'm not here to gatekeep. Just bear with me. You know what I'm saying? I never did this on live like this before, but I appreciate y'all for staying. All I ask is that you tap the screen like somebody already doing. I appreciate you. Of course, y'all already know I was finna ask y'all to follow me. Shit, other than that, I ain't asking for nothing. It's a link in my bio if you want to join my Discord, but this is for beginner traders only, so I don't expect nobody to want to do that just yet. I want to get you past, you got to at least know what the hell you're doing so you don't just, jump off in the deep end without me as your lifeguard. You feel me? I'm going to give you some floaties and shit. Anyways, each candlestick represents 30 minutes of time. So NVIDIA opened up a little bit over $174 with that red candlestick, and it dropped down. Because remember, you read the red candlesticks from the top down. It's like somebody jumping off a bridge or some shit. Don't you look at them fall down from the top down, right? So that's pretty much why it's easy way to remember. They need to jump off the deep end to learn, brother. No doubt. They can jump off the deep end, and Anthony, his name is Anth-X, y'all. He wants y'all to drown. He wants y'all to swim or drown. I don't blame him, but nah, I'm here to help, because if we knew better, we do better. And you know what I'm saying? It's some people that real life, they'll do it if they knew how easy it was. And then didn't nobody tell me shit. I had to figure it out the hard way. So I know what you mean. But if you have a mentor, you get to save time and money. But without that mentor, yeah, your ass is bizound to drizound. Anyways, back to the lesson. You got green candlesticks, red candlesticks, blah, blah, blah. NVIDIA fell down to 173. And you see that big green candlestick right there? The largest candlestick on the screen, NVIDIA went from 173 all the way up to 175. Okay, so, and we're not going to be specific with the cents and stuff. I just want you to understand that it went down and then it came all the way up right at that level. It bounced off the level of support. Remember, support is like the floor. Support is that level where it just seems to not want to go below this level. I like to look at price like a bouncy ball. I like to look at price structure. I did, a grown ass man, just relate to price structure to a bouncy ball. Yes, inside of a house, when you take a bouncy ball, little 25-cent gumball balls and shit, and bounce it real hard on the ground, it hits the floor, hits the ceiling, hits the floor, hits the ceiling. You understand what I'm saying? That's price gonna do just that inside of support and resistance. Mark my words. So don't be one of them people that see it go to resistance and act like you don't know where it's about to go to. The only way it's not gonna hit the flow is if it breaks above resistance and close above resistance. Other than that, it usually hits that level and bounces right back down to support. So that's what they use the levels of support and resistance for, because that's how they know whether it's about to go up or down. Like sometimes, most of the time, price respects the fuck out of support and resistance. Most of the time, price is going to be moving in a trend, like in a direction. And when it's moving in that direction, it ain't just gonna reverse real hard. Like it don't work like that. It takes news and different levels to trigger this shit for it to go in a different direction. So for the most part, if it's going in a trend, don't go against the trend. I'm letting y'all know early. The trend is your friend, and you're going to hear that a lot. Now, like I was saying, the price came down to 173, went up to 175, came back down a little, gave you that red candlestick, and then pay attention to the wicks. Notice that the wicks are different sizes on the candlesticks. Also, remember that this is a 30-minute chart, and each candlestick represents 30 minutes of time. So the first candlestick will be 9:30. The second candlestick will be 10 o'clock. The third candlestick will be 10:30. The fourth candlestick will be 11 o'clock, 11:30, 12 o'clock, 12:30, 1 o'clock, 1:30, 2 o'clock, 2:30, 3 o'clock, 3:30, 4 o'clock, and the market closed. And we closed up at 176. We had about 4 green candles go straight up in the row from 175 to 176. And y'all will learn that's good money. It's great money, actually. So from 173, 176, a $3 move, lovely. Almost a $4 move because it's 176.99. You might as well say 177. So NVIDIA is about, because listen, SPY, which is the S&P 500s, I'm about to tell you. Let me slow down. You right. I don't even know why I'm going to SPY. He said, what do the long wicks mean? Good question. So I'm going to show you about the candlesticks and which, like, they all mean different things. Yes, they all mean, yeah, a green one means up, a red one means down, sure. But if you pay attention to the shapes of them, they have strength. They have different, they all have different meanings when you see them. So you can go off of candlestick patterns, and that'll give you a strong idea of where price is about to go as well. Anthony said rejections of price, the highest point or the lowest point of price. That's right. So it's rejections of price. He's right. The highest point or the lowest point of price. So what he means is when you see a big green candlestick like we did, excuse me. So look at the first candlestick right here, and it says buyers in full control. Right there from 173, that big green candlestick, buyers were in full control right there for 30 minutes straight. All right, because this is a 30-minute chart, so each candlestick represents 30 minutes of time. But you notice that each candlestick means something different. So you notice the first one means buyers were in full control. That's a strong body on that candle. No diddy. All right, so sellers showed their strength, but buyers outperformed. When you see that the candlestick on the right side of the second one, the second green candlestick. So sellers popped up. They showed their strength, but the buyers outperformed, meaning that it still ended up green because it's this. Think of this shit like tug of war. Think of it like tug of war. You got buyers on one side, sellers on the other side. Literally, people buying and people selling. And whoever wins changes the color of the candlestick. Okay? And you can see who winning based on, let's pretend that the wick is really a rope and that the color represents the strong side. I think that was a good explanation. Yes, it is a great explanation, actually. I just made that up on the spot. It says, y'all don't trade off just candlesticks. We not trading off just candlesticks, Adrian. They have to learn candlesticks first. All right, I'm just showing them what the candlesticks mean. You understand? I can't just storm. See, y'all want them to drizzle. Are you trying? I'm trying to help people out. Not trying. I am helping people out, right? Are y'all on TikTok? Are y'all trying to be on TikTok, or are y'all on TikTok, right? We ain't trying to do shit. We doing it. So I gotta show them this, bro. I can't, but I'm gonna move on since he said y'all can't, I ain't gonna let you the type of person I gotta put in the back of the class, or one more outburst like that and I'm sending you to the principal office face side. What do you prefer? Because my moderators ain't in here right now. I usually go live around 12, like literally late at night, and I'm giving out call outs and shit. So I figured today I would dedicate the live specifically to new beginners, because they be joining the live and shit, asking questions, and I be having to stop what I'm doing and explain to them, because I'm not going to ignore y'all. I have a soft spot for new traders, because I know how it was when I got in the game. Nobody want to tell me nothing. So I hope y'all understand what I mean by that as far as the tug of war. Yes, it's just like that. It's super simple. It's not hard to understand. When you see a full red, sellers are in full control. And then the buyers showed up, but you still, when it's in the middle like that, it is an indecision. So there are other candlestick patterns, but we're going to go forward with the lesson for now. I just wanted to get that out the way so you guys can understand candlesticks moods. Right? You got to understand this shit so that you won't be just looking at it blind, because a lot of people don't even trade the chart. They don't even look at the candlesticks, because I can teach all this, but none of this is going to get you rich. What's going to get you rich is making sure you pay attention to how you thinking when you enter a trade. And it's Girl Zoe. Just follow me. I got you. I'll make a post so you guys could download all these pictures. All right. And matter of fact, you don't even need to You don't got to do none of that. Y'all should check out Pinterest. Check out Pinterest. Pinterest has a lot of. I ain't trying to get people off the app either. TikTok get mad when I try to put people on. TikTok be blocking, bruh. They app blocking. They don't want me to tell nobody, how beneficial Reddit is, or how beneficial Pinterest is, right? Or my Discord server. But it's all right, TikTok. Ain't nobody gonna hurt you. Now, like I was saying, now what is a stock option? Since we talking about candlesticks and trading, because I want you guys to know that you can either buy the stock. Somebody asked me what's the ticker. Hold on. It was NVIDIA. That was NVIDIA. NVDA. You guys, ticker is how you find what stock you trying to trade. So you're going to hear people say ticker a lot. And ticker just means what is the abbreviation for that stock. This company is NVIDIA, but you can find it under NVDA. It's just an abbreviation. So now we know what a ticker is. We know about support and resistance. We know about candlesticks. I want you to know that NVIDIA is what at that point in time when I took this $176. You could either take $176 and buy one share of NVIDIA, and now you are a shareholder of the company. And when NVIDIA go to 200, your money go to 200. That's simple. All the stocks don't cost $176. Some of them cost $1,200, $1,300, like Netflix. And I know a lot of y'all was watching Netflix in 2020 and 2023 when it was $100. If you had knew this then, right? Don't get me started. I always get excited when I talk about Netflix. I ain't gonna, you saw the view count go down as soon as I start talking, because they already know. So yeah, anyways, you can buy this outright and own a piece of it and own multiple pieces of it. You can take a piece of your check and invest it every month or every week, or you can invest in it every week. It ain't got to be a piece of your, however you want to do it. Allocate some money towards it. If you don't want to take $176 all at one time, you could just take $10 and say, just let me get $10 worth of it for now. And then say, let me get $10 more next week. That's called buying a fractional share. You don't have to just buy whole pieces, but the point is to build a portfolio, because there's other companies out here that are worth you investing in right now, because we are living in that age again where, you know, it's like being alive when the cell phones first came out and you had the chance to invest in the internet and the cell phones when they first came. This is like that. Microchips and AI, right? We living in that time. But yeah, so Netflix was 162, just like Nvidia is right now, around in that same area. And if y'all looking at Nvidia like it costs too much, I mean, people was probably doing the same thing to Netflix when it was $162 just a couple of years ago. And if you had about 100 pieces back then, you know, you 1,000 pieces back then, you a quick million in 2-3 years. But I understand. I'm just throwing that out there so y'all can get the shit going now, so y'all can get the ball rolling now. But there are other ways other than just buying it. Now, Netflix costs $1,180 a share right here. Now, instead of me, somebody says Netflix was not a $4 trillion market cap, man. It don't matter, but it don't matter about it being that. If I go off a market cap, I miss opportunities like this, right? So, yeah, Abraham, you use a screener. You use something called a stock screener, Abraham, but we're getting ahead of ourselves. I kind of want to slow down real quick. So when you are investing, yeah, sit your ass in the back of the class. All right, when you investing, you want to take your percentage of your money and leave it as buying power for opportunities that arise. That's first of all, too. You want to build a portfolio. You don't want to be all in on one stock. You want to have it diversified, right? So that whenever one sector is down or doing bad, you still got, you know, some shit to hold you up or to hedge it, they say. Now, what I wanted to put emphasis on is, instead of, if I wanted to make money from Netflix going up or down, and I don't want to buy 100 shares outright, you know, since I don't want to buy 100 shares, and because it'll cost me $1,000+ for each share. Okay. So 100 shares it is, you got to have at least 100K. But instead, I can trade stock options. And what happens is I'm able to benefit from the price movement of Netflix as if I own 100 shares. You guys, one contract is worth 100 shares. One contract is worth 100 shares. Hold on 1 second. I'm all over the place. I got it. Yeah, so one contract is worth 100 shares. One contract is worth 100 shares. I said I got to get that in y'all head so y'all understand. It's because when you see the options pop up on there, you're going to be confused. You're going to wonder why it say $1.50. You can be like, ain't no what? Yeah, they are letting you get. They'll let you get it for $1.50 a share, but it's going to be times 100 because one contract is 100 shares. So they'll let you get it per contract. You're going to have to buy it by the contract. So if they're going to let you get it for cheap, it'll be more so along the lines of you paying 100, and if it say $1.60, it'll be 160 for one contract. I'm gonna show you what I mean, so we don't get carried away. I'll show you what I mean. So let's look at let's use BBAI. I'll use that one because since I think I was trading that earlier today. We'll use BBAI. Or yeah, we'll use Webull. Fuck it. All right. So you see Webull, $15. This is a brokerage firm that you can download, and you can trade stock options and futures, and you can invest on here as well. So that's a good app to use. It's great for beginners. I highly recommend downloading Webull, actually. This is not financial advice, but it's for educational purposes. Webull is a great one to use, and this also is a great stock. I do see Webull going to like 70 or 80, but that's another story. We just want to talk about how to actually trade this. So I can buy Webull. I can take $15.60 and buy one share of Webull, right? Or I can take $150, or so let's just say $160, and buy 10 pieces of it, right? or 100 or 1,600 and buy 100 pieces of it. So what happens is that's buying it outright. But if I wanted to trade it like stock options, you don't just press buy, you don't press buy. You press buy when you just want to just buy a piece of it. But you're going to press that button, you're going to press trade right there. And then this is going to pop up. This is for Robinhood. I just want to show you what it looks like. You're going to hit trade options. When you hit trade options, a screen like this is going to pop up. All right. Never mind the time. I was preparing this shit for y'all earlier because I be thinking about y'all ahead of time. I knew you was going to be right here where you at. I was thinking about you and shit. You know what I'm saying? So let me get a follow. Let me get some. Can you hit the likes a couple of times? I'm really trying to achieve my little live goal. So if you new here, can I get a I'm new here gift? It costs 1 penny, right? Can I get a I'm new here gift? If you new here, it costs 1 penny. I'm penny pinching. That's all I'm asking for. Hit the live. That's it. That's all I'm asking for. It helps me want to keep it going, y'all. I don't want you know what I'm saying? Thank you for the roses. Thank you for the heart, y'all. I appreciate it. But if y'all hit that flash goal right there, thank you, Lil J Lo. I appreciate it. Jamir, hit the Jamir, it costs a penny to hit the one I'm asking you to hit, bro. I appreciate the roses. Beggars can't be choosy. There we go. All right, I'm done talking. I'm gonna go ahead. I'm gonna continue. I just wanted to make sure we understood. You feel me? Thank y'all. Y'all understood the assignment. I appreciate it. Now, like I was saying, it'll look like this. At the top row, those dates at the top, you guys, ladies and gentlemen, that is called the expiration dates. And expiration dates when you trade in options, because remember, we're not buying Webull outright. We trying to trade. You guys want to learn how to be a trader, like a day trader or swing trader, face app. You in the right spot. So this is what you do. You look at the date. You want to make sure that if you are trying to day trade it, like you want to get in the trade and out the trade today, you want to open that trade and close it today, that would make it a day trade. The fact that you open this position today and closed it today, that makes it a day trade by definition. Thank you for the gifts. And also thank everyone for following. I'm happy to be a part of your journey. If you're new to trading, you know what I'm saying? I appreciate it. Someone says, did you know Dr. Kelly is charging $5,000 for this information? Dr. Kelly I almost said something, JB. You know, don't get me started. But yeah, it was people like that motivate me to do this shit for free, JB. You feel me? It's people like that motivate me to do this shit for free. I also want to say something to all the people that's in this live right now. We live in 2025, they say, right? Get the fuck on the internet and do some research. Take some time out of your life and research. And when you're done researching, research. The word is the most important part in that word. It means you have to do it again and again. It's called research for a reason. You're not done. And you don't fail in this shit until you actually quit. That's when you done. That's when you failed, when you actually quit. So don't let nobody discourage you. You know what I'm saying? Yeah, I got plenty recommendations on books. You can start out with one that's how about Day Trading for Dummies? I know it sounds cliche and corny, but I'm super fucking serious. You'll be amazed. It's a lot of information in the book. But yes, research. But YouTube is the best. You can use YouTube. You can get on Reddit. You can get on an audio book. Right? Amazon got a plethora of books for you to go through. Right? You just do some research. A lot of us don't like to read. Some of us like picture book reading. Some of us some picture book reading people. I understand. I understand. YouTube helped me out a lot. I swear it helped me out a lot too. So, because basically we are visual and audio learners, right? We gotta hear it, but I like reading as well. It just hit a different spot in my brain, you know what I'm saying? But reading books, none of that shit gonna make you a great trader. I'm telling you. Go, like somebody in the comment section did say, get in the water. That's real shit. Who to listen to on YouTube? There are some people on there called Wise Trade. WYSETRADE. They got some pretty good information on there. I think it's curated, you know what I'm saying? It's streamlined. It's very easy to understand. I could send you to Trap, you know what I'm saying? You could find this dude on the internet. He called, I think it's called Wall. I don't know. Just type in Wall Street Look Like Us now, and you'll see him pop up. He was pretty cool when I first started. Just somebody to listen to, you know. And yeah, it's a few other people. Just get on there. Don't get no favorite moolah. I promise you, like most of the information on there is great information, and it's okay to go through some of it and, you know, not like that person and then find that same information from someone else. So sometimes I might like the person, but you might not like them. But I promise you, it's somebody on there that's going to deliver the information to you exactly how you need to hear it. And if they can't do it, I'm stepping into the arena. I got you. I'm gonna get you right there where you can do it on your own. I'm not gonna give you fish. I will teach you how to fish. You see what I'm saying? So you in the right spot anyways. I'm not on YouTube as much as I am on TikTok, but I also got a Discord. But anyways, I need to go on with the lesson. I'm talking too much. I apologize, y'all. At the top, expiration dates. The day traders, they don't care about expiration dates because they are pretty much closing that position the same day. So it don't matter what the expiration date is. But you can get an expiration date that expire next year and still close it the same day you opened it, and it still technically was a day trade. But I'm just saying they usually don't care because they are trading something called 0 DTEs, and those are 0 days to expire. They are cheap. They are cheaper than all the other expiration dates, because the further out you go on the expiration date, the more expensive the contracts become. So, Matt, you want to use Webull or Robinhood? Those are the top two I recommend for beginners. I highly recommend Webull, because Webull has a section on there specifically for beginners, like a whole section called We Learn. It's like Trader University. You'll love it. Yes, Jose, you can trade 0 DTEs on any stock, and they are cheap. You can get in for damn near $30, $50 sometimes, right? And I don't want to, you can lose your money too if you're wrong about what direction it's going in. But, this shit is not about predicting. It's not about predictability. It's about probability. Like, you gonna lose in the stock market. But futures are a little bit easier. Somebody asked me real quick thoughts on futures. They are a lot easier because you don't have to deal with the Greeks. You don't have to deal with a lot of the stuff like expiration dates. You don't have to deal with the pattern day trader rule when you trade in futures, but it does require a larger amount of money to trade futures. But they are easier. But right now, let me get the options out the way, and I'll do a crash course on futures in the future. What you think about Webull stock? I know Webull is going back to 70. I just can't guarantee y'all shit legally, but yeah, I mean, look at it. Look at the product, look at the company, and look at the chart and back test it and look at the past. Now, with that being said, look at the top of this screen and see those expiration dates: August the 1st, August the 8th, the 15th, and so forth. So now we know. For me, like I said, since I think it's going up, they give you this option strategy builder if you knew. So you usually won't see something like this on every app, but they do have it on Robinhood and Webull for people that just, it helps you understand what strategy you're getting yourself into. So before I go forward to the next slide, I want to put emphasis on the different types of strategies that you can enter and why you would want to enter those strategies, because it matters. It matters. Just stay with me. We going somewhere. Here we go. So you do a call. When you buy a call, you're betting the price will go up. Y'all understand? When you buy a call, you are betting the price will go up. I don't even like the word betting. Let's say predicting. So when you buy a call, you're predicting that the price will go up. And when you sell a call, that is also a bullish strategy. And I say bullish, bullish, because you think, like, bulls is for whenever you think the price is going up. Bears, they think the price is going down. So if you bearish, you think the price is going down. If you bullish, you think the price is going up. Bulls initially attack in an upward motion. That's where it got the term bullish from. And bears, they attack in a downward motion. Like they gonna attack you with their paw, they gonna smack the shit out you in a downward motion. So that's why it's called bearish. Now, when you sell a call, that is a bullish strategy. When you sell a put, that is a bearish strategy. When you buy a put, you're betting or predicting the price will go down. So I really want y'all to focus on the first two, because that's really what you're going to be doing most of the time until you actually wrap your mind around what you're doing. Because when you do straddles and iron condors and you doing multiple, those are multiple legs on one position, literally, like you. So a straddle or a strangle, because you got a straddle and then you got a strangle. That's when you buy a call and a put. That's like betting on. That's like if the Lakers play the Bulls. And you want to bet on, you just said, fuck it, I'm going to bet on both teams. I'm going to win regardless, but you're going to lose regardless, but you're going to win regardless. So what happens is the one that, let's say during halftime, the Lakers is winning. So you would just go ahead and take the loss during halftime for the Bulls, and then you will let the Lakers bet continue. I hope that made sense. So you buying a call and a put at the same time when you're doing a straddle or a strangle. When you're doing a strangle, you buying a call and a put. Both of them going to be out of the money. New here, what platform do you use to trade? Keisha Key said, I use Webull and Robinhood. I like Robinhood because the interface is easy to use, but I love Webull because it is informational, right? Information is fundamental. It is literally, I don't know, I like to learn. So, and can you tell us why use the long? So long means, remember, when you go, it's called long because you don't own the shares. See, when you could have bought the shares outright, but you don't own the shares. You don't own the shares, so it's called long. When you own them, this called covered. So you can do a covered call. That's when you own 100 shares of that stock. And you don't need, see, a call option is they giving you the right to buy 100 shares, but not the obligation. I hope that makes sense. You got the right to buy 100 shares, but not the obligation. I got to slow down. I'm getting ahead of myself. So I got to go back and show y'all what it actually looks like so that you know before I go to telling you, no. Somebody tried to join the live. I'm sorry, I can't have a guest right now, buddy. You will distract the heck out of me. All right, so where was we at? All right, so yeah, you go to trade options. So it's called long call because I don't own 100 shares of Webull, so I'm going to trade it. And one contract will be equal to 100 shares. So Webull is trading at the price of $15.60 right here, right? So remember, the expiration dates are at the top. September the 5th will be the expiration date on this, meaning that whatever price I pick, I am predicting that Webull will go to that price by or before that date. And I really want it to be before that date. I picked the expiration date based on me wanting it to be before the expiration date. I buy myself time. I'm a swing trader. I like to swing trade, you know, because that's when you open a position and hold it overnight. I'm not trying to persuade 200 people to be swing traders. Y'all can use this same information to day trade. Jeff says, give yourself a lot of time. Some of us have anxiety. Some of us, you know, can't sit the fuck still. So, you know, I got friends that can't sit still. So they great day traders. You might be a wonderful day trader. What's theta when it comes to options? I'm going to that next, Maximilian. I'm on that next. I just want to give these people an idea of what in the money and out of the money is. All right. So we think Webull going up is $15.60. Let's say I think it's going to go up. Let's say I know it's going to go up to $16. So I'll get the $16 call. And then let's say I'll get the September 5th expiration date because look how far out that is from now. And I know Webull is going to give me more than $1 by then. This is to me is text. To me, it's like the closest I can get out of the money It's pretty much at the money. So about this out of the money and into the money shit, like what does this mean, Said? Okay, share price 1560. Y'all see that, right? Right in the middle. It's telling you what the price of the stock is right now. And when you are buying a call, anything over the share price, any price higher than the share price is out of the money. OTM. This is when you buying a call. If I don't care what the share price is, and you buy a call, any of the prices above where the share price is, that's out of the money. Any price under or cheaper, right, or lesser than the share price, that's going to be in the money. Jeff said it, ITM. When you buying a call, any price under the share price is in the money. Any price over the share price is out of the money. When you are buying a put, it is the complete opposite. When you are buying a put, any number under that number is in the money. Am I tripping? Did I just say that right or wrong? Okay, yeah, when you're buying a put, any number under that. Yeah, because you thinking it's going down. I'm really tweaking. Any number over that. Yeah, because it's the complete opposite. It's flipped. So yeah, you gotta get it understood because it matters. I get confused on the put side, but you definitely gotta see it to where you understand what's in the money and out of the money. I got an example. Matter of fact, I'll show you. You gotta know what you're looking at. Let's see. So this right here, this is a deep out of the money call. So this is September the 5th. And if you look how deep out of the money it is, the chances of this happening is less. Like it's less than what it would be if you was in the money or at the money, which is close to the strike price. But it's cheaper. So you see how I say 78 cents? They are going to let you get, as long as you buy one contract is how much, y'all? How many shares is in a contract? Does anybody remember? Nobody that knows, you guys that's already know, I'm not asking y'all. Jeff, I know y'all know. I'm not asking y'all. I'm asking the students that's just, that's been here. Okay, thank you. Yes, 100. Yes, y'all. So Webull, remember Webull $15 now. So you wanna get 100 shares? You're gonna spend $1,000. Or you can trade options and get 100 shares for 78 cents a piece. 78 cents a share, meaning this is really $78. 78 cents, meaning really that's $78 because that's 78 cents times 100. Okay, so what happens is you click on it and it'll show you, let's see what this is. This is the $16 call, $35 call. Yeah. What happens is if it costs it'll cost you $78 to enter this position. I'll say 2 of them. So then it'll let me I'll spend $154 for 2 contracts. And when Webull goes past $35, I'd have made $1,800 off $154. I'm gonna slow down because I don't want y'all to get confused, but I just want you to get a taste of how it works, because that's when you deep out of the money. And you right, returns like this. This is exaggerate. This is an exaggeration too. This is just a display, just me just showing you, because I don't want you to go out there and buy deep out of the money calls and shit. I'm just showing you. Like, remember, you buy, this is for when you don't own 100 shares of it. You don't own 100 shares of it. You literally, you think it's gonna go up. I'm gonna get the $16 call. I'll get the $16 call to expire in September the 5th. And it says limit price. So that's me. I can tell them, can I get this for $2.20 instead of $2.42? Or I can say, just get me in the trade. I'm about to tell you what open interest is. I just wanted to give these people an idea of what it looks like. I try not to be all over the place, but sometimes it turned out like that. So look, we'll go ahead and go straight to what's happening, So a stock option is a contract to buy or sell a stock at a set price before an expiration date. We got that understood. We got that understood. Now we'll move forward to the options, tradings, and Greeks meaning, because he keep asking. So I'm gonna tell y'all. I was gonna get to this, but dude in the back of the class, I'm about to call the administrator in here on your ass. The moderators is in here. Good job explaining options. It's very technical stuff. It is, Jeff. I'm sweating bullets. I hope I'm doing a great job because I don't want to mislead anyone. And I don't want y'all to believe nothing I say. I want you to go and look it up. That way you can see it for yourself. You need to do that anyways. You don't need to just believe stuff nobody tell you. Go look it up. H-Town, I appreciate it. Hey, don't put no apple on my desk now. You about to be my favorite student telling me I'm your favorite teacher now. I ain't heard that one yet. Okay, options trading and Greeks. Delta. First of all, let me show you what it looked like real quick. I'm gonna go back. So we got to see what the delta look like, so you guys can be confused for a second, and then we're gonna clear the confusion. Okay, here we go. If you look here at this contract, this is a General Mills, I think, not General Motors. Yeah, General Mills. $55 call. This not General Mills. Jeez Louise. I done got confused on the ticker symbol, you guys. But either way it goes, this is a $55 call, right? So what happens is you got a spread. The spread is 3 cents or $3. It's a $3 spread on it right now. That means that the lowest price somebody paying for this is $30. The highest price somebody paying is $33. It's General Motors. Okay, cool. So what you paying attention to is the Greeks, which is like real talk nerd information. But it's very vital. It's very helpful if you can understand, because it's going to let you know whether or not you're looking at a good contract or not sometimes. For the most part. Bro, fix the echo. I don't know why it's echoing, Reekway. I don't know why it's echoing. If it's echoing for everyone, I apologize. I'll end the live and come back on. Let me just get through this one little part real quick before I do that. But I apologize for the echo. Oh, it might just be your Wi-Fi, Brody. Everyone's saying no echo. It might be your Wi-Fi, pal. See how you just put yourself on blast like that? Got me apologizing and shit. Okay, he said he okay. All right. All's well. All right, so you guys saw the delta, the theta, the gamma. All right, so the delta measures change in price when stock price moves. So I'm gonna give you an example. Like every time Apple let's say it's at $100 and you enter the call, and that contract was $80. So now you made it cost you $80 to get that. Now that means it was 0.80 cent to enter that position. So the delta, I got to slow down because this is technical shit. I'm going to go all the way back. I got to go all the way back. But first, I'm going to give y'all an idea which each one mean. Every time the price of that stock moves, that contract value, the value of that contract, the premium you paid will change in price based on what the delta is. So however valuable that contract is going to be, that is going to go up or down in whole dollars based off the delta. And then you got the theta, measures decay in price as expiration gets closer. So you're going to hear people say, you better close that contract or you're going to deal with time decay. Those contracts that you enter into, the closer you get to expiration, the closer y'all get to the expiration date, the less valuable it becomes. That's theta. You want to pay attention to that, to the theta, because it's going to tell you how much money you losing every day that contract is open. Every day, it's the price of doing business. Now, the gamma measures change in delta when the price moves. So the delta is going to be changed based off what the gamma is. Whatever the gamma is, that's how much you can add to the delta every time the price change. And Vega measures change in price when volatility moves. Volatility is like move how big of a movement it is. If it's a lot of volatility, it was a lot of movement. If it was no volatility, there was no movement. A stock can sit there and trade from $100 to $101, you know, all day, literally moving only in cents. Excuse me. Any questions? Any questions? So what range do I want the Greeks in to know it's a good contract? Good question. Good question. I got you. I got you. Did I let me grab this. Let me grab this. I got you. Did I let me grab this. Let me grab this. Grab this. Let me grab this. Okay. Open interest versus volume. So you can look at implied volatility. You can look at the Greeks, but the Greeks is going to, like, if you see pretty much a high IV, that means it's going to be they are expecting a lot of volatility. If you see a lot of open interest, that means a lot of people are interested in it, right? It's self-explanatory. A lot of volume means a lot of people are actually trading it. When you're dealing with delta, you want the delta. It can only go up to 99, which is pretty much 1. It can only go up to about 1. You'll never see it at 1 though. But the highest it can go to 1, and that can work in your favor or not. That can be work. That could work. A high delta can work in your favor or not. It just depends on what position you got. So yeah, you will figure that out as you go, Void Echo. I highly recommend some of you guys to paper trade. A lot of mentors tell people don't paper trade, but I disagree. I think it helps you become familiar with the product, basically the app. You get to learn how to actually use the app before you lose or make real money with your money. You should be doing it with paper trading. Thank you for liking the live, JB. I appreciate you so much. So yeah. Open interest, the total number of outstanding contracts not yet settled or closed. There's a lot of people that's already can't paper trade on there, though. You can. You just have to double tap on the option that you're looking at, and it will add it to something called your options watch list, and you will be able to track that option as if you actually bought it. It's pretty much the same thing, but don't use Robinhood if that's the case. Download Webull because it's okay to have more than one. Open interest reflects the level of market commitment and ongoing interest. Helpful in understanding long-term trends and market commitments. Influences market dynamics through the flow of new positions. Used for gauging long-term market interest and potential new trends. And then volume. You could trade a stock on volume alone with one eye closed, for real. But trading without this is like trading with one eye closed. Like trading without looking at the volume is like throwing shots in the dark. Total number of contracts or shares traded in a given period. It indicates current market activity and liquidity. Useful for confirming current trends and assessing market strength. Reflects immediate trading activity and potential volatility. Employed to confirm market trends and detect potential reversals. So basically, volume gonna let you know if it's a big move or it's a little move. Open interest gonna let you know if everybody's thinking about it or not, or if nobody's looking at that shit. Like nobody really, sometimes nobody looking at it and it don't mean shit. And in the OI, the open interest can go up, or the IV can go up too. And the implied volatility going up can help you, but it can also hurt you as well. So now let's think about how much money do you actually need to start trading, right? So day trading, it says you can get around the PDT rule, which is the pattern day trader rule. You can get around that rule with 25K, but you can start with as little as $50 to $100. So what happens is when you get into something called a margin account, thank you for the roses, Shane. When you get into the margin account, I hope I said your name right. It'd be so hard to say these names because I know somebody named Shauna that's better like that. You use Strat or ICT? I use Strat, but yeah, Reekway. I use Strat. So yeah, you can get around that 25K, y'all, by using a cash account. Okay, so they're gonna give you an option whether you want to trade in a cash account or a margin account. In a margin account, let's say you deposit $2,000, they will give you more money than what you actually have to trade. And you can take larger positions. However, you can lose more money than you actually got in your account. So it's dangerous. They're going to get their money too. So you can do that, or you can just, and if you do, you can immediately start out with a margin account without having 25K. But the thing is, you will be limited to 3 day trades within a 5 trading day period. So you cannot make more than 3 day trades within 5 days. So you can make multiple trades as long as you don't open it and close it in the same day. If you open it and close it in the same day, it counts as a day trade. And you can only do that 3 times pretty much in a week if you are using a margin account. But if you go to a cash account, you can take as many trades as you can, as many trades as money you got. Right? As many trades as your buying power will allow you. I said will let you. So as much as you want to. But that's only if you in a cash account. Options trading. You can begin options trading with 500 to 5K. Risk is higher with options though, y'all. Understand that. But so are potential profits. Bigger the risk, the bigger the reward, right? Scare money don't make no money, right? It take money to make money. Y'all know the sayings. Y'all know how it go. And investing. So first of all, day trading and options trading is around the same shit. They just letting you know that when you day trading, you got to get around that PDT rule. But that only applies to margin accounts. Investing. You can begin your investing portfolio with as little as $1. I repeat, $1 can start your investment portfolio. GoPro was less than $1. You could have got a piece of that. A lot of stuff started out as $1, and you'll be amazed what $10 worth of a penny stock can get you in the future. I know somebody that bought in AMD when it was in the pennies, and each piece is worth over $100 now. So you can make periodic investments over time. You don't have to invest it all at one time. Swing trading is also in the lines of options trading, but swing traders usually trade with 1,000 to millions. You can scale up as you go. That's right. So I want you guys to keep that in mind when you get started. This week this was just, the tip of the iceberg. I didn't want to get too carried away, but I want you to understand options. So if you look at this, X represents the strike price, P represents the premium. So it says options, and then the graph drops down. You see call options on one side. We're going to focus on that side real quick. Call options when you think the stock going up, the price going up. You got a long call, you got a short call. But remember, this is all under the calls. You got the right to buy on a long call, and if you get paid, you pay a premium to get into that position. So whenever we buying calls, we going long because we don't own 100 shares of it. That's what long mean. Remember, you don't own 100 shares. If you owned 100 shares, it would be short call because you have an obligation to sell those shares if the price actually reached where that person think it was going to reach. But you receive a premium to enter into a short call. You pay a premium to enter into a long call. Didi, thank you. I appreciate that. Do y'all understand that? You pay a premium to enter into a long call. And if you own 100 shares, you can do cover calls, short calls. You don't have to own it. You can be in a margin account and they'll let you do short calls as well. But you do have an obligation to sell those shares. If the price reaches that spot, that's how you can lose money. Just like when you do a long call, you can exercise that contract as well. And that's another lesson as well. So it says example with X equal 100 and P equals 10 for a call and put option with multiple price levels. It's just showing you that you can look at the spot price and basically get an idea of how much you're going to make or lose. So when you enter into, when you receiving a premium, it's less riskier than you paying a premium. Those positions, like those covered calls and those calendar spreads, are less riskier than just saying, hey, I think the price is about to go up or down. You feel me? So you bullish, let's say price is at support. Remember, support is when the price is bouncing off of the floor. The floor would be support. So whenever price is down at the bottom and it won't go no lower than that, and it keep hitting that spot down there and it ain't going no lower than that, you can do a bull call spread, a long call, or a bull put spread. If price is not at support, these strategies work for this: long straddle, long strangle, long call, short put. My favorite one is the long strangle, because you basically saying, hey, I'm in the middle. I know price finna make a big move. You do that when you expect a lot of volatility, because you know it's finna go up a lot or down a lot. And that puts you in a position to capitalize in either direction. You just don't want price to stay the same. Someone says, I always enter a position with 125 shares. I got some trash in my portfolio I wouldn't mind selling. Hey, I don't see why not, Void Echo. It's okay to reconstruct your portfolio. Why not? Readjust it, because it's a lot of stocks out here I don't want you to miss out on. I ain't trying to FOMO you or nothing, but like I said, man, microchips, AI, yeah, sideways or rangy. That's what we had today on SPY and IWM. Take strategy suited for rangy market, short straddle or short strangle. I wouldn't do neither one. I just don't trade sideways. Someone says, I've been learning for 3 weeks now, and I understand you, bro. You're for real spitting. Thank you. I appreciate that. Thank you so much. I appreciate that. DD made it to level 3. Congrats, DD. Good looking out. And you can, hey, listen, I got to get the trophies where they do. Thank you, DD. So, yeah, bearish. When you are bearish, remember, that's when you think the price going down. Let's say price is at the top and it's been at the tippy top. I mean, price then came up like SPY did, like SPY is right now. It seemed like it's just living at resistance. And it keep breaking resistance and creating new levels of resistance, actually, because we hit all-time highs. Somebody says, I'm paying $5,000 to the first 5 people to text me happy. Can one of my moderators get Lucas out of here? He lying, y'all. If y'all text him, he might copy your account or something. I'm going to block him and I'm going to report him. He ain't sending y'all no money. Don't be no fool. He lying to you. He's scamming. He is a scammer. Let's make sure we report him. Let me see if I can report him real quick. You don't be in here lying to people talking about you gonna send them. You ain't sending nobody shit. 5K. Yeah, it's a scam, CT. Somebody says, I've been trying to learn it too. I'm taking it all in. Well, if y'all come here, I'll do it. You know, we got past this lesson. There's many more to come from here. I want to get y'all right where y'all need to be, but you might want to join the Discord. So I'm going to put it this way. It is 100% free to join. Yes, it is 100% free to join. But I have a premium section that it's gonna be right there for you. Don't pay it no attention, because you're gonna make enough money in the general section. You're gonna make enough money in the general section. You're gonna love me. You're gonna be a part of the premium anyways. I know this to be true. So just join. Hit the link in the bio. And if not, if you don't gotta join Discord, a lot of people don't like Discord. So just hit the follow button if you don't want to do that. You can just hit the follow button for me, and I appreciate it. I highly appreciate it. I'll keep it going. We'll do more and more, because I'm not like these other mentors and these other people that, they gatekeeping. I give you my playlist on YouTube that got me together a couple years ago, and that I actually update on a daily basis. But I want you guys to control your emotions when you get to trading. When you have a limited amount of trades, like you probably will, because you'll be on their margin account probably, and I don't want you to get the PDT rule. They actually about to take that shit away. So you might not even have to worry about it, but you still need to control your emotions. So you got 2 different people trading. They taking the same trades, but the only difference is the emotions. The first trader made a good amount, right? because he made money on trade 1, made money on trade 2, and only lost $52. If a trade is looking bad, always cut your losses and don't dig a deeper hole. Versus the other person made money on trade 1, made money on trade 2, and gave a lot, gave $423 on that loss. Just because your trades are limited, you shouldn't let your emotions take over and wipe out your profits. Rick Way says, don't be greedy. That's right. Don't get caught with your hand in the cookie jar, because it can happen to the best. It happens to the best of us. Now, I also want to point out the magic of risk to reward, right? So let's say you lose. Let's say you take 3 trades with the 1 to 2 risk to reward. And what is a 1 to 2? Let's say I'm gonna risk $1 to make $2. So the first trade, I lose 2 trades, and then I win 1 trade. So how about that? I lose 2 trades, I win 1 trade. So you win nothing. The other scenario is you take 3 trades with the I'm gonna risk 1 to make 10 mentality. You lose 2 trades, you win 1 trade, you walk away with 8%. And does it make sense? This shit is not about predictability, it's about probability. If you use this method, then it's gonna be hard for you to be not profitable, because you need to learn to cut your losses short and let you maximize your gains and you minimize your losses. All right, so tonight I'll be live again. We're gonna do a show where we do a market recap, and we're gonna basically get the market sentiment set out for the rest of the week, give some call outs, give some signals, get the money set up again. Explain that again, bro. Well, it's about probability, not predictability. If you cut your losses short, then you can damn near lose 9 times in a row, and that 10th time will cover all of your losses and then some. FOMC Feds this week, that's right. So we're going to talk about that later on week where you might want to tune in. I'll try not to do it too late, because I know a lot of us got work tomorrow. For anyone who hasn't traded yet, you are not ready for the emotional swings watching stocks. They are ready, memes. You wasn't ready, memes. They is ready. Don't tell my students they ain't ready. They is ready. They ready like Freddy, right? They ready. They about to set it off too. Don't be telling them what they not doing, what they need and what they ain't. What does funded account mean? Funded account means there's websites where you get on there and you pay $50, and then they're gonna give you they're gonna give you $50,000 for that 50K, but they're not gonna give it to you not to go spend. They'll give you 50K to trade with, but you have to pass a test, an evaluation. What is that evaluation? You have to make a certain amount of money, you have to take profit at a certain level, and you have to cut your losses at a certain level consistently. Someone says, is Chad or Panda going to hop on the lives? Aw, they want Chad and the Panda. Apple user, I'm going to make sure I clip this, and I'm going to put it in the Discord so they can see that they are wanted in the live, that they have been special requested. So Apple user 589485, change your username for me. But yeah, I'm going to have them on here tomorrow. They will be on tomorrow's show right after the market close. All y'all got to do is hit follow or join the Discord. You probably already in the Discord. But yeah, hit follow. I will have Chad and the Panda on the show this week. Don't worry. Those are 2 of my top analysis in the Discord, y'all. Some great people. Phenomenal guys. But yeah, with that being said, I'll finish the rest of this tomorrow. Thank you all for tuning in. I'm about to jet out. Y'all better leave. Don't meet me here, beat me here, right? I'm about to jet out though. I'm gonna go ahead and get up out of here. Y'all hit follow before y'all leave. Can I get a follow before y'all leave so y'all can make sure we can bump into each other again? Can you tell us how to look up you on Discord? Yeah, Pally, go to my profile picture and go to my profile and hit that link. Now, it's giving you a 7-day. I know y'all get freaked out when y'all see the credit card information, but that's for the people trying to join the premium. But it also come with a 7-day free trial, so don't be afraid. Don't be afraid. After you can put your shit in there, it ain't gonna charge you nothing. Cancel it after 6 days, the same way you do when you trying to get a free trial from fucking Amazon Prime or something. But when you actually enjoy the product, when you actually enjoy me and my company and the community and my resources and what my information and I mean, listen, I'm just gonna give you me on a platter. You can't beat that. But anyways, I gotta split that with my team too. So it ain't like it all go to me. That go to my team, it go to the server cost, and it keeps me able to do shit like this and teach people for free. I'm only able to teach people for free because of the people that support me as much as they do. So it's like they donating to charity, robbing from the rich and giving to the poor. That's what we own. So yeah, anyways, if you can't join that way, Polly, or anybody that can't join the Discord through the link in the bio, it's okay. I will walk you through it. I will personally send you a link if you inbox me and say, I need the link. I will send you the link. With that being said, I appreciate y'all for tuning in. It's been a phenomenal live. I didn't think it'd be this great. It was better than what the hell I thought it was gonna be. Let's make, yeah, man. Today was literally twice as good as yesterday and half as good as tomorrow. All right. I love y'all, man. Thank y'all for tuning in. It was nice to meet y'all. In case I don't see y'all no more, but if you follow me, you gonna see me again. Thank you, Mariah. I appreciate it. Thank you.